Hi, folks. Dan Bird here with the Daily Scan for Friday, the 17th. Sorry, I didn't do one yesterday because I am at the Money Show in Orlando yesterday and also today. It's 10:10 a.m. on the East Coast. So I want to do a quick one before I head off to the show. In general, the sense at the Money Show has been that the market is still bullish. However, everyone is kind of expecting a pullback, and we might be beginning that pullback process. We'll look at that in a minute. There were a couple of people, and including one that I saw with Carter Worth, who said is potentially we could go down 10%. And I'll show you where that is in a minute. There's one other person at the show that suggested that. Of course, that was Peter Schiff, and he's always bearish. So in general, it was pretty much bullish, but with a short-term pullback. So some of the notables at the show were David Keller. If anyone knows who that is, I recommend you check out his YouTube page at Market Misbehavior. And he does a daily show. I don't know if he's doing one while he's here at the Money Show. And also Jeffrey Hirsch from Stock Traders Almanac is here as well. Had a chance to chat with him for a while, as well as David Keller. Really interesting conversations. And I'll talk more about it next week. The show goes till tomorrow, and I'm going to go to a few more sessions today and tomorrow afternoon. So I'll let you know what my thoughts or what the general sense was next week. All right, let's take a look and see what's going on today. I am not a financial advisor, of course, so this is all for educational purposes. Let's take a look, as always, at the 10-minute charts and see what the market's doing right now. Now, yesterday, someone said after Wednesday is the time to get back in. And I said, not yet, because options expiration is actually today. And even though the market closed slightly above the 21-day moving average on Wednesday, yesterday it actually closed below it. So it's going to be important to see what happens today. Looks like it's trying to rally a little bit, but there it is right there. So you'll notice right there, this is a 10-minute chart again. These are the aggressive sectors. Money flow is heading up slightly, but it did that at the beginning of the day yesterday as well, and then rolled over. Pretty much right about 11:30, 11 o'clock, 11:30, right about noon, it rolled over. So let's see what happens today when we get to that point. I'm doing this a little bit earlier today, so we're in that period when the market usually goes one way or the other, and then professional traders fade it, meaning they go the opposite direction. So we'll see if that happens today around 11:30 or noon. Technology is slightly down. Discretionary is up, which is good in communication. So two out of the three aggressive sectors look pretty positive. On the defensive side, Staples looks pretty strong still. Real estate is still okay, moving down slightly, and utilities moving down a little bit. So there's the rally that's trying to push things up today. Financials is down, healthcare is down, industrials started off strong, but now it's down. Materials are down, and energy is pretty much flat today. And the rotation, growth versus value, you can see how it's come down all week, and right now it's pretty much flat. It's not really giving us much, but it looks like the rotation is still from growth to value. In particular, discretionary versus staples continues to go down. There's technology hanging in there, and semiconductors are hanging in there. So we've got some major earnings reports coming up after next week. I'll show you that in a minute. And then transports are looking pretty strong actually today so far. Breadth, this is the key one. Breadth for the S&P. This pink line represents the 50% level. So these are the percent of stocks above the 20-day moving average. Below 50%, it's actually at 37%. For the ones below the 50-day moving average is 42%. So that's below 50. The 200 is still above 50, but the bullish percent index, meaning the stocks, percentage of stocks that have bullish configurations, is sitting right on the 50% line. So all of that is implying weakness. I don't know how long that will last, but you can see how the S&P is trying to make it back to that 21 days. This is a critical line in the sand. This is the battleground right here between bulls and bears, that 21-day EMA. So that's the thing we need to continue to watch. We'll see how it closes at the end of the day today. Here's the Russell continuing to go down, actually looks weaker than the S&P right now. And you can see down here, compared to the S&P, money actually is flowing out of the Russell, at least for yesterday and today, and into the S&P instead. So we'll continue to watch that. Here's mid caps. Again, the percentage above the 20, 50, and 200. Even the 200 in this case for mid caps is sitting right above the 50%. It's at 51% right now. And for small caps, same thing. It's very similar. At NASDAQ 100, trying to make a comeback as well, sitting right up here. But look at the advancers minus decliners, definitely lower, and volume is below zero. So none of that looks positive. The VIX, which has had quite a good run the last day, starting to roll over a little bit. So we'll see what happens by the end of today. Options expiration day, it could be volatile. It'll be quite a win if the market can make a comeback and close above these previous highs right here. So that's important. So here's the breadth for the NASDAQ 100, 20 and 50. 50 sitting right at the 50%. So 50 out of 100 NASDAQ 100 stocks are above their 50-day moving average. 41 out of 100 are below, and the 200-day is at 55. So 55 out of 100 are above the 200-day. Bullish percent index continues to fall off and now is below 50. It's actually at 49 right now. So that all of that looks like there's some at least temporary weakness in the market. If we look at the market bias matrix, which I did update last night, and notice what it looks like right now, the chart, this is basically all of these components. These are all the asset classes of the market, indexes, sectors, industry groups, intermarket relationships, commodities, metals, and currencies. All of those together on a short-term, medium-term, and long-term basis. And this chart right here charts the whole thing. You can see everything is red up here, but it's clear that it has rolled over. So this usually is a pretty accurate depiction of what the market is doing. Right now, it's sitting right on a very critical support level. So we either have to start moving back up, or we may have quite a bit more downside ahead. I can't tell you which direction that's going to go. The market will tell you that. Just keep watching it to see. Let's look at the S&P. S&P sitting, trying to make a comeback, like I mentioned, sitting right at its moving average lines. The 8 is getting ready to cross the 21. Momentum is below zero. The gamma flip line is right exactly where we are right now. So all of this, again, is telling us that this is a critical junction. This is the battleground right here between bulls and bears. And it's really apparent when you look at it on a chart like this. If we go back and look at the NASDAQ 100, we can see the same thing, although it's quite a bit above the flip line, and it's actually above the 21 right now. So that's good. This expected move is from last Friday. They changes every day, and since today is options expiration, the expected move from last Friday is pretty much right where it was expected to be. And then we'll look at the Russell, which is below the flip line, below the expected move, right on the 21-day. So again, there's the battle line. Battleground is in play. Here's Bitcoin, which is continuing to go down. 4 in a row now, 4 big red bars in a row. It's broke through the support line, and the 21 is getting ready to cross the 50. So that's the medium term signal, and momentum is below zero. So all of this implying a confirmed downtrend. It's below the 200. So none of this looks good for Bitcoin. I can't say how much further it will go. If we look at this on a wider basis, we could have support, a support level right about here. Let's call it right in this area. Make that line darker, so right there. So we've got a little ways to go for that support area, right down here about 102. That's where it likely is going, potentially could reverse right there. That also would put it right down here at the extreme on the Keltner channels. So that usually means a reversion to the mean. You can see it happen right here. Went down and then reverted to the mean back up to the 21. And that could happen again when it gets down here to around 100K. 100K is a nice round number. If it gets to 100 to 102, likely will bounce and head back up to the 21, which is back up here about 115, which it'll actually be lower by then, so maybe 112. So Bitcoin's not looking great. Bitcoin is highly correlated with the NASDAQ 100, and since it trades 24/7, that's not a good sign for the NASDAQ 100 either. So let's go to the dashboard, and you can see the markets are trying to make a comeback, although the VIX is still well above 20. It's at 2341 right now. There's the VIX. You can see right here, starting to creep up back through here, and now it's just spiking higher. Went much higher earlier today, and now it's pulling back, but we'll continue to watch that. It's at an extreme, so this might be time for a pullback, but don't know if that's going to be temporary. So you can see over here, the VIX can get pretty high up. This is April right here. This is July of 24. Right now, we are pretty much at a level equal to 23, roughly in that area. So this could continue to go higher, and it seems to want to go higher. You can see the momentum right here actually has a lot more room to go to the upside. So this could be telling us that even with a slight reprieve today, and we'll have to see what happens into the end of the day, but in general, the VIX is implying that we may have more downside ahead. All right, let's go back here and go back to the dashboard. You can see here staples and discretionary, neck and neck. These are the two key ones. This is discretionary, what we would like to buy. Staples are what we have to buy. They are neck and neck right now at the top. Pretty much the same. So there's another really good example of this battle between bulls and bears right now. Discretionary and staples right at the top. And technology is down here at the bottom, along with utilities, which has been a real leader. If we look down here at the earnings calendar, we've got Netflix coming up next Tuesday. We've got Tesla on Wednesday, Intel on Thursday. What else do we have? Bookings, PayPal. Here's Google on the 29th, Meta on the 29th, Microsoft on the 29th, Apple on the 30th, Amazon on the 30th. So all of these are the week after next. We've got a few next week. So next week is when really the earnings are going to start in earnest. So I would suspect that the sell-off that we get will likely last until we start getting earnings. Don't know about Netflix. It's been in a downtrend. Tesla, not sure about that one either, because this is the earnings where a lot of the fallout from people not wanting to buy Teslas anymore might show up in this earnings report. But Tesla has a lot more things than just cars, so they could do just fine. And then Intel, of course, while they've been doing great, their earnings may not reflect it. So these are going to be really critical ones. The 21st is Tuesday, 22nd is Wednesday, 23rd is Thursday. So starting next week, Tuesday, next week is going to be a critical week. Next week is also one of the weakest weeks in the October timeframe. And then the week after that, which is when all of these start to report, that's when we get Meta and Alphabet, Google reporting, Microsoft. These will all be reporting, and Apple, and Amazon, these are all reporting in the strongest week, which is usually when rallies start. So I would say keep an eye on things until after next week, and then we'll see what happens. All right, one other thing somebody asked me about, and interesting ticker symbol IDMO. So I looked it up and found out that it is a momentum ETF. So I compared it to SPMO, which I've talked about before. SPMO is a momentum ETF for the S&P 500. IDMO is international, so developed momentum. You can see right here the comparison between the two. So focus is developed markets outside the US. SPMO is large cap stocks in the S&P 500. So basically momentum stocks. And this down here shows you the top holdings. Nestle, Shell, Novo Nordisk over here, Nvidia, Meta, and Amazon on this side. So what I did was I did a comparison between the two. You can do this in stock charts just by looking at a gallery view. So right here, go to gallery view, and you can put two symbols in separated by a comma, and it will compare them side by side. So on the left is IDMO, so that's the international. On the right is SPMO, so that's S&P 500. This is an intraday view. International clearly much weaker. If we go down here to the daily view, they look similar, and the international actually looked like it was outperforming, except for today, it is below the 50 moving average, and the SPMO is not. So right now, international looks much weaker than the S&P does. So keep that in mind. Might be good just to watch this chart. On the weekly view, you can see they look very similar. So on the weekly view, IDMO is up there quite a bit. They actually are looking almost identical, frankly. So they're both starting to roll over a little bit. So on a weekly chart, long term, they look almost identical. You could choose either one, you probably get the same, close to the same returns, except for the daily chart. So right now, very short term, and basically today, actually for the last few days, it's been hugging the 50-day right here, but couldn't get through the 21, whereas that's what it looks like right there. Whereas SPMO has actually been above the 21 and now sitting above the 50. So it looks much stronger. All right, so that's what that looks like for the person that asked me that. Thanks for watching. I'm going to go to the Money Show today. I'll let you know next week what I've learned. And if anybody is there, if I'm in Orlando, see if you can find me. I'll be walking around. I'll be in quite a few sessions. So it's a pretty interesting show. It's always interesting when I come to this. So that's it for now. Let me know what you think. Give me any comments. Please like and subscribe, and ask anything that you'd like me to check into. I'd be happy to do that. All right. Thanks. Have a great day, and I will talk to you next week. Take care.